Hey y'all, welcome to the Mindset, Market, and Money series. If you're new here, my name is Amina, also known as the Neurodivergent Investor. And I created this series specifically for new traders that typically tend to overlook one of the most important aspects of investing and trading, and that's your mindset and the psychology of trading. Over the last few years, one of the most important things I realized is that you can have the best strategy in the world, but if you can't manage your emotions, stick to your process, or bounce back from those inevitable losses, it will not matter. So this series is all about helping you build a rock solid foundation by mastering three key areas. Your mindset. We'll talk about how your thoughts and emotions affect your decisions and how to build mental habits that support consistent trading. We'll talk about the markets and the importance of understanding how financial markets move, not just technically, but psychologically. What moves the market is people, emotion, fear, and greed, and we'll tap into all of that. And lastly, money. We'll talk about risk, how to manage it, how to think about it, and how to make decisions based on probabilities and not your emotions. So whether you're brand new or already making trades, this series will help you build discipline, confidence, and clarity all before we ever place a single options trade. Now, before we get into candlestick patterns, RSI indicators, or secret buy and sell tricks, I want to talk about something that most beginner traders overlook, and that's your mindset. With the right mindset, you can turn even basic strategies into consistent wins. So in this first lesson, we're going to explore why your emotions are running the show and how to take back control, how to build patience and discipline, which is the real profit maker, and some psychological traps that even experienced traders fall into. Why emotions drive trading decisions. Let's be honest, money is emotional. When your money is on the line, your brain flips into survival mode. And you have two brains when it comes to trading. The rational brain, which is your logical, patient, analytical, this is who you think is trading. And then you have the primitive brain, that's the emotional, impulsive, wired for survival side. And this is who is actually pushing the buttons or taking the actions. Now, to put it into context, think about it this way. You research a stock, you feel good about it, and you buy into it. Then all of a sudden, maybe the next day or two, you see that the stock drops 5–10%. You automatically get nervous and you feel like you have to sell just to make the pain stop or to get whatever gains you feel like you have left. Now, here's the kicker. Nothing has changed except the price. Your research is still valid if you've done it, but your brain sees danger and wants to get out. Lastly, you have your overtraders that just feel uncomfortable sitting still. But a study by Dalbar showed that while the S&P 500 has returned around 10% per year, the average investor only made 4%. Why? Simply because of emotions. This is why it's important to develop patience and discipline. Patience and discipline are your trading superpowers. What does patience look like? Waiting for a clear, high-quality setup, not just trading out of boredom, and letting your trade play out even if it takes time. Understanding that not trading can sometimes be your smartest move. Now, here's some tips on how to train your patience muscle. Define your edge. Know exactly what you're looking for. Set realistic goals. Focus on monthly or yearly growth, not daily wins. And study the charts. Learn how trades unfold over time. Now, discipline, on the other hand, is doing what you said you would do when you said you would do it, even when your emotions tell you otherwise. So here's some tips on how to build discipline. Make a plan, create some rules, write down your strategy, write down your risk, and write down your exit rules. Use a checklist and review it before every trade. And then set circuit breakers. If you have 2 bad trades in a row, step away. You want to practice this routine because the more you do it, the more natural it feels. Now let's talk about some mental traps that mess up even the best of us. One is confirmation bias. When you're doing your research, don't only look for information that supports your idea. Look for some things that speak to the other side of what you believe to be true. You always want to have well-rounded information. Force yourself to find 3 reasons why your trade might be wrong. Number 2, you have anchoring bias. You get stuck on your entry price thinking, oh, I'll sell once it gets back to what I paid for it. Ask yourself, would you buy this now, today, and at this price? Then you have recency bias. You had a few wins. Now you think you have beginner's luck, or you're on fire, or you have a few losses and you're scared to take the next setup. Keep a journal and document your journey. Trading is all about long-term results, and if you have the data to review, it really helps. Lastly, loss aversion. Losses feel twice as painful as gains feel good. So you want to focus on risk reward, not just win-loss, and accept small losses as part of the process on your education journey. That's one of the things that I was very intentional about, is understanding that, yes, the wins are good, they feel good, they're great, but I was actually looking forward to the losses as much as I was looking forward to the wins, because I knew those were opportunities for me to get stronger and get more educated in the process.